Welcome to the latest edition of Fundamentals. This time around, I'm going to look at one actively managed member of our list of 72 favourite funds, namely Newton Global Income. As the fund's name suggests, its mandate is to deliver rising income distributions and do so by investing in income-paying stocks on a global basis. Even though it was set up less than 5 years ago, the fund is a whopper with around £5.5 billion under management. The fund managers are Nick Clay and Ian Clark, and they base their process on Newton's thematic investment approach. This means that the portfolio can look very different to the index at times. Moreover, the typical performance profile is one of outperformance in more testing markets and underperformance in strongly rising ones. The portfolio is kept very tight, and the latest fact sheet reveals it contains just 49 holdings. By country, America represents 44% of the assets, followed by the UK at nearly 25% and Europe at nearly 25%, although here the bulk of the holdings lie outside of the Eurozone. At just 2% of the fund, Japan barely gets a look in, and emerging markets don't feature much either, as we can see here. By sector, consumer staples, consumer discretionary and technology are the three biggest sector exposures at 23%, 18% and 15% of the portfolio respectively. That's over half in total. By contrast, there's a zero weighting towards basic materials, with telecoms and energy, both staple sources of income for some peers, also having a limited role. Large caps currently represent 3/4 of the assets, with mid caps covering the rest. There is no exposure at all to small or micro caps. The fund is eligible for SIPs, ISAs and dealing accounts, and it currently comes with a yield of around 3.1%. Dividends are paid quarterly, and note that Newton Global Income does come with accumulation units where dividends are automatically reinvested for you, but on this occasion we are discussing the income units where dividends are paid out. The ongoing charge figure is 0.79%, so you do have to pay for the expertise of the fund managers. And for those of you who set store by such things, the fund comes with a 5-star ranking from Morningstar. So those are the mechanics. The question to address next is, why could investors consider this collective for portfolio inclusion today? Well, I think there may be two possible reasons. The first is that 3.1% yield. Very few central banks have raised interest rates this year. The US Federal Reserve, Bank of Canada and Czech National Bank are three that spring to mind, and returns on cash generally remain pretty modest. This graph shows the headline interest rate in the UK, US, Japan and EU over the past decade, and it's not a pretty sight. So those investors wanting income may feel compelled to seek out stocks as a source of yield. The second is the fund's performance, shown here. Data from Morningstar suggests it is the single best performer over the past 3 years, out of a field of 70 odd, which is no mean feat. This is not to say that Newton Global Income will suit every investor. Some may feel the 3.1% yield is not high enough for them, although this must be set against the risk being taken to target higher returns. Around a dozen of Newton Global Income's global equity peers offer a higher yield, and investors could also consider bond funds as a source of yield too, although they will need to look to corporate debt, emerging market government debt, or even so-called junk bond or sub-investment grade corporate bonds if that's the preferred path. That said, the value of Newton Global Income's own stock holdings could also go down as well as up. Others may not like the 0.79% ongoing charges figure. This is pretty competitive against its actively managed rivals, with only a couple coming in cheaper, but there are 4 passive options, exchange-traded funds or ETFs, that do cost less, ranging from 0.29% to 0.6%. They will never outperform their benchmark indices and merely follow them, however. Newton Global Income, on the other hand, will aim to deliver yield and beat its benchmark too, which in this case is the MSCI World High Dividend Yield Index. Investors must therefore do their research on Newton Global Income to make sure that it fits with their overall strategy, target returns, time horizon and appetite for risk before they put any capital to work. Thank you very much for watching, and I look forward to seeing you next time.